Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show, everybody. Just a reminder, if you have a question, head over to realestateandmortgageshow.com. You can submit your question there. Paul and Frank will reply to you as quickly as they can, and we'll get it on air next show.
I remember a few shows ago I made a New Year's resolution that I would stop picking on Frank, and I said, it was totally a lie.
Oh,
but
100%.
have I picked on him today? I don't remember.
Not so far.
I've been pretty good.
We'll see.
I've been pretty.
We're only halfway.
That's
so
right. The show's
we're only
still
halfway.
new.
We're just halfway. So.
All right, Frank.
Yeah.
So a lot of the year last year, we talked about 2026 being a year for renewals.
Yep.
What's happening? Where are we? Where are we
renewal
going?
cliff. I mean, you read all these articles. We're in a renewal cliff. We're not in a cliff. Renewals are coming up this year. Many Canadians that chose a 5-year fixed 5 years ago now are in the ones. They're definitely in the ones because all of 2021, pretty well the interest rates on 5-year fixed started with a 1, and now they're facing potentially 3, high 3, low 4s. Hopefully by the middle of the year, the end of the year, we'll be in those low 3s, mid 3s if everything works out perfectly. But there's still a lot of people that feel like, oh my God, I'm going from 1.59, I'm going all the way up to 3.89. I'm not going to be able to afford it. Just to clarify, your payment doesn't go up double just because the interest rate doubles and more than doubles. Your payment, keep in mind, your mortgage is amortized over 20, 25 years, depending on how much time you have left. So your payment will go up according to your amortization. So you can't put a number on it. And, of course, your mortgage balance matters too. But, it's likely not going to be as severe as you think it is. Nonetheless, if you're already struggling to make ends meet based on your mortgage rate starting with a 1 and now you're stuck with a 3, you have options. You likely have options because if you purchased your home in 2021, you probably got significant equity in there. If you purchased your home prior to 2021, unless you refinance it in 2021 to the max, you've got even more equity than you think you might have because, of course, house values went up tremendously in 2021 and early 2022.
Let me ask you this, though, Frank.
Yeah.
Our average sale price is about $700 here, so it's not going to be that bad. You do mortgages all over the country, so you're dealing in Vancouver, you're dealing in Toronto. What's it going to be like in Toronto?
Yeah, Toronto's different. I mean, I talk about Ottawa a lot because that's the majority of our mortgages that we do are in Ottawa. So I think in Ottawa, again, most people are going to see their payments, depending on the mortgage balance, might go up $100, $200, $300. If you can afford it, great. If you can still make ends meet. If you can't, you'll have options to refinance. You'll have lots of options. Again, just because your bank calls you, get that second opinion, third opinion. If you live in Toronto, Vancouver, totally different because where the average mortgage in Ottawa in 2021 was maybe $450,000. In Toronto, Vancouver, those were $750,000 to $900,000. So now, I talk about in Ottawa, your payment might go up $100, $200, $300. In Toronto, it might go up $600, $700, $800.
Crippling.
And that is significant for some families that are just barely making ends meet in an expensive city like Toronto. Mm-hmm. And again, the problem has been that the salaries haven't kept pace with the cost of everything else. So,
Toronto's employment is actually lower than ours.
It is.
Ottawa has
the average income.
Average income is lower in Toronto than it is in Ottawa.
So, see, you're looking with that, but it's true. Now, there's more people, so anytime you've got more people, the average income tends to come down because you've got...
You're averaging over a bigger
and the service level, right, doesn't make as much money as some of the other levels. The finance is very, obviously, well paid in Toronto,
right? The
financial district, but you get outside the financial district, now other facets of the city doesn't have the high-paying job. So it kind of makes sense that the average isn't. But nonetheless, I mean, it's a very expensive city to live in.
Well, look at their. I mean, our condo market here last year. I mean, it was the months of inventory was skyrocketing, and the prices were average here in Ottawa. You know what's happening in the Toronto condo market? It is taking a bloodbath.
Yeah,
like a little bloodbath. Builders are taking a bloodbath. In fact, there's lots of mortgage brokers and banks that won't even touch a builder with a condo building right now.
Right.
And that's why they're moving in Toronto. They're moving to these purpose-built rentals because they can get financing easy on a purpose-built rental, but they can't unless they have a certain number of sales on a condo.
Right.
And, you got, 100, 200, 300 units and you need 75% sale before you get your financing. They're not getting it. And so they're like, okay, so this is like year 3 now. We've taken all these deposits. We eventually have to give it back. We're holding this land. our financing's X, we're in trouble. We need to get some shovels in the ground. So they're turning them now to purpose-built rentals.
Right. And, I mean, it's got to be crippling for some of those, even just holding the land.
Well, it is with the cost of financing, obviously. But I think, again, in Ottawa, I think the condos aren't going to be as severe as they are in Toronto. In Toronto, I mean, the estimate is that we'll start to see the condos rebound in 2029. So we've still got a 2.5 year period, 3-year period before the condos will rebound. Only because, again, anybody that bought a condo in 21 in Toronto that moved in 21 is probably doing okay. But once we hit 2022 and 2023, anyone that bought those condos and moved in 22, 23, they might be in negative, as far as their equity that's built. And
right.
Therefore, what's going to happen to the market, the condo market? If we think it's hard now to be able to buy a condo in Toronto, I think it's going to be even more difficult for the next 2-3 years. So that's why in Toronto they're predicting, and Vancouver as well, there's a lot of empty condos in Vancouver that were purchased, for investment purposes, and they can't rent them out because the cost to carry them is too much. So
in Toronto, the buildings that were able to go ahead, people are realizing they're underwater, and it was actually cheaper to walk away from their deposit.
Yeah.
It was like they had a $75,000 deposit. They're like, okay, so I take possession of my condo, I'm underwater $150,000.
Double.
When is that going to come back? So do I just walk away and throw my $75,000 away? And there's
plus all the interest that accrues in that time frame.
And there's a lot of people that were like, it's cheaper for me to throw $75,000 away than to sit on this condo that may not increase in value for quite a while. But I do agree with Frank. 2029 in the condo market in Toronto. Oh, damn it!
The over under.
Did I say I agree with Frank?
Oh, yeah, no.
I said I agree with Jank. Jank is an investor in Toronto that I follow. His name is Jank, not Frank.
You go with that.
All right. So what Jank has to say is
who you totally agree with.
Who I totally agrui with Jank, and he's an economist I love, by the way, Jank. Jank Smith. Yes, Jank Smith. Yes. So I don't agree with the guy across there, but I do agree with Jank, But yeah, I do think that, the condo market eventually will rebound in Toronto, but there's going to be so many people who can't afford to keep them over that period of time. Right. They're going to be so underwater. So,
but you feel in our market in Ottawa, it's going to be...
So the like I mentioned, the 0 to 600. So there's no zeros, but under 600 is going to be your townhouse, your small condos, that kind of thing. Those are going to be the best, and condos in that price range will be fine. They will be fine. As you get higher than that, though, we're going to creep into the balance. Then we're going to creep into the buyer's market as you get higher than that.
Right.
And there is a lot of condos in Ottawa that are 800, $1 million, 1.2, 1.5. Those ones are going to be a bit of a struggle, because you're going to be in a buyer's market. There's going to be a lot of selection, and buyers will have their choice. But our biggest product next year, and the same thing that spurred our 2025, was the townhouse market.
Right.
It's going to be flying off the shelf in 2026, especially once this first-time home buyer GST credit comes in or rebate comes in.
Oh, something you actually mentioned, you mentioned Vancouver briefly, and like a lot of condos sitting empty. One thing people should know about is their vacant unit declaration. When's that due?
Coming out. I think it's the end of February or March. But I think the link is going to start coming out. If it's not out already, we'll start to see a lot of media publicity around it to make sure that because they've actually talked about how much tax revenue they've generated from it, which, got to be honest with you, in Ottawa, it surprised me. I didn't think we had that many vacant units, but I guess we do. I mean, it's nothing compared to Vancouver in Toronto, but I was surprised at how many in Ottawa are vacant units.
It's March 19th or 20th, I believe.
Wednesday, March 19th.
Yeah, one in March 19th. So
the declaration, it opens on January. Well, it opened 2 days ago, January 1st. Yeah.
So everybody has to fill that out, whether you have a vacant unit or a house, whatever it is, you have to fill it out. And it's very important in the Ottawa real estate industry right now because we have a clause in the contract that says the seller acknowledges or agrees that he has, he's filled out this declaration. And come closing, if you haven't filled that out, you're on the hook for that tax. So very, very, very important that you fill out those things.
Well, and there's some penalties for it too that aren't insignificant. What was it?
No, it's not cheap.
$250 if you're late on it.
We'll talk about it. You know what? We've got another 10 shows until we'll talk about it probably on a weekly basis.
Yeah.
Remind people to do it so that
it'll come up for sure.
Yeah.
You know, as we go to the break, I just want to, just remind people that my friend Jank Smith, I just want to thank Jank Smith for all.
Jank is now Frank, so you can say it all you want. It counts. We're up to 5,
and
by the way.
You can actually, his email address is jank@frankisneverright.com. That's my friend Jank.
Have a question, head over to realestateandmortgageshow.com. We'll be right back. Welcome back to the show, everybody. Just a reminder, if you have a question, head over to realestateandmortgageshow.com. You can submit your question there. Frank and Paul will answer them as quick as they can, and then we'll read them on air. At this point, we're in our last segment.
Probably not time.
Of our first show of January.
Especially when Frank has about 72 birthdays from.
We'll get to that. We'll get to that. All right, so we've sort of talked about some market predictions, both sides, real estate mortgages. What about for your teams? Paul, Well,
I mentioned earlier that, our goal is 750 deals. We once again finished top in Ottawa again last year. And, our goal is to be even bigger and better this year. We have a lot of programs that we're looking to do. We're going to put AI on steroids. We're going to put videos on steroids. It's funny. This little company called Google about 4 years ago said 80% of things are going to be video on social media. If you've been on social media, 100% of things are video.
Yeah.
So the one thing that Frank and I are doing, which is pretty exciting, is we are potentially we are starting a podcast. We are going to do a podcast. So we're doing one of the
Q1, right? Goal was Q1 sometime.
Q1. We're going to start to complement the show. We're going to start a podcast, a real estate and mortgage show podcast. So I'm outfitting my West End office right now with a podcast studio where Frank and I can, and yourself obviously can do a podcast as well, just to complement the show. So AI, video, podcast, just staying ahead of the curve, something we always do, and that's really our big goals and our big push this year.
A lot happens in a week. I mean, sometimes we go from one week to another, and so much happens, and as Paul gets older, you can tell that he's got to write things down because his memory is not what it used to be. So,
takes him like 10 minutes to put his glasses on to be able to read his.
We got to get him the Steve Gregory glasses to clip together pretty soon.
But I think we're starting. I mean, it's not happening overnight because I got to build this studio and stuff like that. But we're pretty excited to start a podcast
on Wednesdays, probably right midweek. We'll figure out a day and we'll certainly announce it and we'll talk about it. But it'll allow us because Bank of Canada's on a Wednesday, so we wait till Saturday by the time on the air. This will give us an opportunity. We'll pick the dates accordingly. Maybe the month end is on a Friday, so the statistics come out on the real estate on the Tuesday or Wednesday. We'll do the podcast on the Tuesday, Wednesday kind of thing.
Even
so we're on top of things.
Even just the number of questions we're getting from the online portal,
100%.
From listeners, some shows we just can't even get to all those questions. Some of them, they're so detailed and good questions that, we want to be able to augment that and be able to answer people's questions quickly and
get some guests. Maybe, it's hard to get guests on Saturdays. People don't want to give up their weekends, but on a Wednesday, maybe we can get some guests. I know that, I'll tell you, I've got a CEO lined up to come on our show on Saturday in January to talk about what's happening from their perspective, from a lender's perspective. So again, our goal is to bring more and more professionalism to our show. Not that we're not it, because we are, but I think that, adding to it and adding elements that are part of our business that I think our listeners will really benefit from will go a long way.
And how many times, I know we talked about this morning, Frank, how many times have we said, everyone that we talk to says, I wish your show was 2 hours.
Yeah.
Well, guess what? Now it's going to be 2 hours, right?
It is. And I invited you both, and I know you weren't feeling well that day, but I know I invited you to a webinar that I get to participate in. How informative was that? Talk about the data that we get, and the data that doesn't necessarily get out to our listeners, our viewers during a podcast. We're going to be able to get that data out even more frequently, which is awesome.
Dig a little deeper into some of those things.
The only thing I feel sorry for the people of Ottawa is now you have 2 hours of Frank. 2 hours in a week of Frank.
Yeah,
I guess, much for being nice. There we go.
Yeah. Sarah, so I told
New
you
Year's resolution
I like to
didn't
keep
even make the end of the first episode, Paul.
I like to stick to my New Year's resolutions, Frank.
You also already missed the gym yesterday, didn't you? Because that's the New Year's resolution for 80% of people go to the gym. And by the 2nd or 3rd of January, I already miss it, so kind of thing. But for my team, we had a team meeting, And our team is my thing with us is just do what's right for the customers. And sometimes renewing with their existing bank, if they're getting a competitive offer, is okay as long as they're getting the right. So that's why I say to everyone, it's okay, get that second opinion from me. I will tell you, it happens all the time to me where I'm able to say to a client, listen, your bank has actually treated you properly. But I'm also going to tell you if your bank hasn't treated you properly. And if a bank says to you, go get another opinion, and if we can get something better, we'll match it. No, that's your bank is not treating you right if they're doing that to you. By far. That is not who you want to be loyal to, because loyal is a two-way street, and they're not being loyal to you if they're telling you they can get you something better, but you have to go work for it.
You have to go do all kinds of work for it. Yeah.
You shouldn't have to work for it. So.
Yeah.
Agreed.
Awesome. Well, definitely an exciting 2026 coming up.
I'm excited for it. I am really excited for it. I think it's going to be a great year, and it's going to be I think there's lots of personal things I want to accomplish this year. There's a lot of business things I want to accomplish this year, and one of them is not being nice to Frank. That's for one. But
it didn't last long. So,
but we'll bring on your friend that you follow. What's his name again?
Jank Smith. Jank Smith.
Yes. Right.
Yeah.
Sorry, I'm having guests on.
Yeah.
All right. So I understand, Frank. You got a list.
Well, I got a list of birthdays because, I don't know, what's 9 months before New Year's Eve? I don't know what happens, but anyway, no. But Tracy Enright from our office, who's been with us, I think, 20 years now. So happy birthday to Tracy this week. And then I've got my little cousin Adamo that's celebrating his birthday, did this past week. And my two nephews, Paolo and Claudio, celebrating their birthdays.
Good German names. Good German
week as well. So happy birthday to them. And again, I wish everyone good health and success for 2026. And please continue to listen to us. We appreciate the listenership that we have. We've, 928, 929 segments in. Incredible. The loyalty that we have still blows me away, and the fact that we're getting so many questions on the realestateandmortgageshow.com. It's again, it means a lot to Paul and I, because it means that we're doing something good and you're benefiting from it, and we're happy to give you all the information that you need.
Can I get some birthdays in quick before we go into that?
Oh yeah, we're good. I guess we should say, like, with the podcast, the show's not going anywhere on Saturday, folks.
Not
like,
at
we're
all.
still going to be here every Saturday, 11 to 12. Don't worry about that. But
we're supplementing.
We're supplementing
the show.
That's our goal.
We listen. Frank and I mean, not to toot, but we get some big names in this city, and there's a lot of times people want to hear more. So we're just giving them an opportunity to hear more.
Yeah, absolutely.
So,
all right, Paul, birthdays.
Today is Angie White. My office manager has been with me 15 years today, and she is literally the backbone. Like, she saves me my bacon nonstop. So happy to have Angie.
I just have a quick comment on that. I don't think office manager is even the right title.
MVP.
MVP for sure.
100%.
She really is the glue that holds the team together.
Yep. Ashley from my team, her birthday is tomorrow, and she was one of the agents that came over with the Tracy Arnett, and she's a dream. Love her. And Jocelyn, the other MVP in my company.
Oh, definitely.
Her birthday is in 2 days, so happy birthday, Jocelyn. And yeah, like Frank said, we're very excited for 2026. We're excited to bring you along with us.
I'm taking credit for Angie because I don't know if you remember, Paul, but Angie lived right behind me when she was just a little kid bouncing on a trampoline, and I think I influenced her to being as great as she did. So you're welcome, Angie, and you're welcome, Paul. But please support local businesses and charities, everyone, and look forward to a great 2026.
Absolutely.
Happy New Year, everybody.